Property Investing Insights, your authority on all things property investing, finance and wealth creation with Right Property Group.
Hello and welcome to Property Investing Insights, Client Stories. And today's guest is an absolute gun. Young Dinal Silva has been kind enough to share his story with us. And my intention here is to help map out how the journey actually unfolds, especially when you're starting off with not such a high income, but then using career progression to also progress your portfolio, dialing in the life milestones and planning ahead in the eventuality that yes, there'll be addition in terms of income when you get married, and then there may be kids, and then there may be lifestyle purchases as well. So when we set up this portfolio, when we set up this plan, we were really looking at, okay, how does this dial in? How does this work into designing your decade? And how can we go hard and filter away all of the noises and stick to the fundamentals and work through how to best build up a portfolio that can stand the test of time, especially in today's day and age of tax changes. So Dinal, welcome.
Thanks, Victor. Thank you for having me.
Thank you. We started this journey back in 2022.
Yep.
And I wanted to, first of all, get a feel for, or the listeners to get a feel for where were you in life? I've just come off a long weekend, so I'm having trouble with my words,
That's all
right?
good,
So it's my old age because it was my birthday weekend.
Okay.
So it's my old age actually showing through, right? So a young stallion like you, where did we start in terms of career-wise? But when you contacted us, where were you?
Yeah, it was in a very interesting point. So I had just so all the uni changes had been announced, and we had to be doing uni from home.
Mm-hmm.
So I was like, okay, all my classes are online, so best thing I can do here is work as much as I can.
Yep.
So I took on 2 jobs in 2022. So I was both retail jobs. So I was working in branch at one of the big 4 banks, and also at Apple at the same time. So pretty much flat out 7 days a week, and tried to squeeze in a bit of cricket on the Saturdays by calling in sick a few times. So that's what life was like back in 2022.
All right. And so what were you studying?
Yeah, so I studied finance and economics at UTS.
Yep.
So both my parents are roughly in the same field as well. So I thought, hey, let's give this a go. And
So in 2022 or prior to 2022, you were studying, but you're also holding down 2 jobs as well.
Yep.
Right. How did you manage your time?
Honestly, thinking about it now, I don't know how I did it.
Yep.
But I think back then there wasn't a lot to do because of COVID.
Yeah.
So you could either stay at home or go to your backyard. There was the only 2 options, right? So couldn't have people over, couldn't go anywhere. So I thought the best or the most productive use of my time was to earn a bit of money. So just thought I'd do that. Right.
So you are a COVID investor, right? So when COVID happened, it actually pushed you into investments.
Correct. Yeah. In terms of COVID, I guess it was a blessing in disguise. For me personally, I took that opportunity to, I guess, as people say now, like grind it out and earn a bit of income so I can work towards goals.
Yeah. And so we'll get into your portfolio in a bit, but I wanted to understand how the conversations were happening since you started understanding money around the dinner table, and what were the aha moments for you?
That's a very good question. So I think growing up, so for context, I lived in Dubai for most of my life, so for 10 years, and then lived in Sri Lanka for about 6 years as well. I think money wasn't a taboo topic at home, but it definitely wasn't widely discussed with the kids. So like we'd get canteen money or something, and then I'd be saving that up over the weeks to buy like a pasta from this canteen or something. So that was my relationship with money in school, at least growing up. That being said, like I felt like I could always sense that there was a bit of tension with money growing up as well. So in the back of my mind, I knew, even though it wasn't explicitly spoken to me about, I knew that this was probably like a contentious topic in general. Yeah.
Yeah. And could you pick when money was tight at home or when it was free flowing?
Oh yeah.
Yeah.
Especially in Dubai, where the job market's very volatile. So, I've seen my parents, lose their jobs, and money definitely gets a bit tighter when that happens. So, yeah, it's a very interesting relationship that I have with money.
And so, what got you started on this investing journey? You've already told me that you're a saver, right? So, what to buy pasta? So, what graduated you from pasta to properties?
That's a very good question. So I can't remember when it was, but it must have been when I was working in branch sometime in 2020, 2021. At that point in time, I was on the telecounter.
Yep.
And then a customer, I think about my age, back then, about 20, 21, he came over and he's like, I want to do a real-time gross transfer because I'm buying a property. I was like, oh, you can do that at this age. And then he was like, I started chatting to him. I was like, how did you go about this? What did you do? And he was like, yeah, I used a buyer's agent, which is where I got your name from.
Yep.
And then I was like, oh, okay, this is very interesting. And then so for also a bit more context about myself, before I jump into anything, I need to know everything about it. So I think the research component from that was huge.
Yep.
So I did my research, watched a lot of YouTube, read a lot of forums, Reddit, whatever it may be.
Yep.
And then I went down to the Decorp project in Tallawong.
Yep.
And then I paid a $500 deposit for one of those off-the-plan apartments.
Yes.
And 2 weeks later, I was watching a few YouTube videos and all of them were saying how, I guess, off the plan wasn't the best way to go.
It's risky.
It's risky, right? Yeah. So I was like, oh my God, what have I done? Got on the phone to the solicitor straight away and I was like, yeah, we need to pull out of this. So initially I tried to do it myself.
Yep.
But then I realized I'm very risk averse when it comes to money. So I don't really want to go down the route of trying to do it myself. So looked around and then I think I set up a chat with you. And then, yeah.
Okay. I want to dial back into, you went through all of the internet forums, looking at property discussions and all that.
Yeah.
What was something that really stood out for you in those discussions? And second tier to that question is, what were the aha moments out of there as well?
I think what really generally stood out is the volume of information that's out there, and how difficult it is to sometimes synthesize that information. So I can't remember. I think I have like a 13-page Word document of all the notes that I took down when I first started from all these forums, YouTube videos, and various other resources.
Yep.
But I was like, it's almost like information overload. But in terms of the aha moment, I think the ball didn't really drop for me until that one. I was randomly just on YouTube one day, and then there was this guy. He was about 28 something. He owned like 12 properties, and he was talking about how he was able to quit his, day-to-day job, which was, he was like a graduate at Mars or something, and he was in marketing, and he was like, oh yeah, I can go on leave whenever I want, I can travel whenever I want. And I was like, okay, yeah, this is definitely something that sounds like, this lifestyle sounds like something I'd want a bit of. So yeah.
Okay. One of the things that I'm seeing consistently, particularly with the younger generation, is the treatment of property investing as if it is a university exercise where you're taking copious notes, right? So one of the podcasts we did with our young Stephen here at RPG, there's huge note-taking and self-reflection, right? It appears that you've done the same as well. Yeah.
Yeah, as in like, I don't know if every time I'm come along to your seminars, I don't know if you've seen me, I have got my little iPad
Yep.
and I'm just writing everything down as much as I can.
Right, right,
So note taking is pretty big one for me.
Yeah, because that then it actually gets into your brain.
Correct,
When you
solidifies some of those concepts.
Yes, that's right.
Yeah.
That's right. Yeah. So obviously, when you are looking at investing, so context, you've just had a birthday. How
Yes.
old are you now?
I am 26.
26. Yeah. Okay. I hate you. So when you first got the inkling when you're a teller in terms of property investing, how old was the investor at that time that you're talking to?
Yeah, that investor was pretty young. So he was 3 years out of high school, so he was 20 years old.
Yep.
2021. So yeah, as in like thinking back now, I'm glad I had that thought back then.
So it was a chance meeting, right?
Yeah.
Which happened because you were working.
Yeah.
And you had that interaction with someone, and you were not afraid to ask the question.
Correct. Yeah. I mean, he probably thought I was trying to cross-sell him something, but I just wanted to know a bit more information.
Yeah. And so when you started the investing journey, what was your initial goal, and how has that changed over time?
You know what? Before I came here today, I looked at the very first goal document that I wrote down before my meeting with you.
Yep.
And it was so interesting. The last save date for that document was January 2022. And the goals there look very different to what they are now. So back then, I think I came into our meeting and I was, I want $150,000 inflation adjusted of income by this age.
Yep.
I want to get my principal place of residence completely debt free. I want to do this. I want to do that. But yeah, that investor was very naive. But I think with the foundational education that your team has given me, I'm definitely able to contextualize and turn some of those goals into smarter goals.
Yep.
Yeah.
And so how has that changed? Has the income goal changed quite a lot, or has there been more infill goals in between to cater for life?
Bit of both. I think I've reframed the way that I've looked at my income goal.
Yep.
So I think when I first came in, I was like, annually I want 150K, whatever it might have been. And that's the benchmark that everyone has, I guess. But now I'm looking at it like, okay, how many days of my full-time job can I replace through the cash flow generated from property?
Yep.
So that's the way that I look at it now. So I'm not there yet, but we're working towards it at the moment. So we can start with 1, 2, then slowly we can work our way up from there.
So when we started, you were on a fairly low income, right? You're circa 60K at the time.
That's right.
And this is testimony to people thinking that you need a huge income to get started. You actually don't, right? You just need basic savings behind you.
Yeah. I mean, I think I was fortunate that the rates were where they were when I did jump into the market. But yeah, it's definitely not impossible. Back then both jobs combined income was about 60K. Fortunately, I worked at a bank, so I did get some of the benefits there.
Yep. I won't ask which bank.
Yeah. Let's not go into that. But
that was a hint, by the way.
But yeah, no, I think I was also very fortunate to have some very good mentors around me at that time as well at the bank. So one of the home lenders at that bank was like, hey, like, you can actually do this, right? So he sat down with me, did a pre-approval, ran through all that process as well. So
generally in life, right, when you're on a trajectory and when you're working towards a goal, sometimes it's someone else actually giving you permission to say, yes, you can actually do that. And it sounds like your mentor at work actually did that, right? So he actually gave you permission.
Yeah, I mean, it's so interesting. Like, it's very interesting, the concept, when you think about it, like asking permission to almost think or comprehend a concept. So yeah, I'm very grateful for the people that did help me throughout that early part of the journey.
Yep.
But they definitely helped me.
Do you still talk to him or her?
No. But I think naturally we just went our separate ways.
Yes.
And I think you have different mentors through different points in life. So that's obviously evolved to someone new now. But I'm very grateful for the people that did help me to get up to this point.
And so you started the journey. We bought our first property at that time in Perth, which was the most affordable market for your circumstances. And it had huge momentum back then as well. So how did you, because you're not only starting in your backyard, and all of a sudden you're going to a different state altogether. First of all, how were you able to handle it yourself in the sense of convincing yourself, yes, this is the right thing to do? And then how were the parents, especially when you're going interstate?
Yep. Yeah, I love this question. So maybe to talk to the first part of your question, I think coming back to that period between, so when I pulled out of that off the plan apartment before engaging your services, I actually, reading through the forums, everyone was talking about Perth. Perth was like the big thing at the moment. And I tried to go at it myself. So I was looking in a small area up north in Perth called Alkimos, so a coastal town. And I was calling up agents. If I was lucky enough that they picked up the phone, I didn't get a call back. Or they probably didn't think I was very serious. So after that, I think after like a couple of months doing that, I was like, yeah, this is becoming too much. So I think that's when I engaged you. Then we had our whole strategy session. We had our discussion. We had all our pre-approvals and everything in place, ready to go. And then from there, I was very much happy with the initial discussions, and I was very comfortable. And I understood that the perspective that your team was coming at it was from an educational standpoint rather than transactional.
Yeah. And so you had huge learnings from the internet forums and so forth. So you're actually ready for interstate investing. But what about the parents?
Look,
he says, very.
The parents are interesting. I don't know if they might watch this, but
you got to be careful, right? You got disowned.
But look, I think with ethnic parents, they tend to avoid getting advice. They love giving it, but they tend to avoid using it sometimes. So I think they were definitely a bit skeptical, not only about interstate, but paying for advice as well. So that was one thing. They were like, who is this guy? Like,
why are you paying him? Why can't you find it yourself?
Exactly, right? And they were like, you've called all these people, like, wait till someone calls back. And I was like, I'll be honest, by that time, market's already moved. So I was like, I took a stand with that one. I was like, I'm going to do this. I'm 21 years old now. Like, I'm an adult.
Jeez, you wouldn't have been very popular.
No, definitely not.
Especially an ethnic parent as well, right? So you're lucky the cane didn't come out.
Honestly, but I was like, I have to stand on this. I will die on this hill, and I'm happy to pay for the advice.
So you owned your destiny.
Correct. I think that's really important. Like, I think wanting it for yourself is really important. And that's just what I wanted more than anything.
So this house obviously was nothing to look at, right? So it was rough around the edges, but it was within your means, right? In terms of holding costs. Do you remember the purchase price?
Yeah. So it was $420,000 in Maddington.
And so that's again a steep learning curve, because the transactional elements of that process can be very daunting to even the most seasoned, life-seasoned person, right? And you're just literally starting your career, and you're jumping into investments as well, against the advice of your parents as well. So you had a lot to navigate at the time. How did you find the process, the learning process of, first of all, signing contracts, and then getting the mortgage over the line, and then the critical moment of settlement? And in between, of course, we had the pest and building reports and so forth. So how did you navigate all of those things?
Yeah, I think I already had a bit of experience around this. So I think sometime around 2020, 2021, around that time, my uncle was looking to build a property. So they had purchased a land in Macarthur. And they had been going through some of these formal processes about pre-approvals and everything. And I went with them to all these display homes and did all of this contractual reading with them.
Yes.
And I was like, and I felt like I was more invested in it than they were. And I found a genuine passion for it. So I think that part was, I already had a bit of foundational understanding of how it worked, especially working in a bank. Some of the pre-approval finance processes were
So you knew the
understandable.
jargon.
Yeah, I knew some of the jargon, fortunately. But one thing that really scared me was the pest and build. Because I remember it came back and I was like, I'm sure, listeners would have seen like some pest and builds, they're very conservative. So I was like, oh my God, what is this? But then luckily I think I had a chat to Maxine and then she was like, don't worry, this is very normal. This is how the process goes. And it was very smooth after that. Yeah.
And with the pest and building, all that, did you also seek external advice in terms of, okay, how does this look to you?
When you say external advice, I don't think I took anyone else's advice other than your team's. I think you were probably the key advisors for me in that space. But obviously you have a chat with the actual person who does the report, so the inspector. And he was like, look, man, like this is very normal, like nothing too much to be worried about. We just have to structure the report this way. That's the way it is.
Often, and this is where people either go down the path of, okay, this is my team and I'll listen to them and no one else. Or that often also get family members involved or other people that they're close with. And naturally people advise based on their life experiences, right? So this is where a critical moment in terms of property investing, that things get derailed because you lose sight of the true north, right? So you lose sight of the goal because you're in the trenches now, looking at pest and building reports, looking at finance, looking at valuations, looking at the actual photos and videos of, hang on, this doesn't fit my mental picture. So that's a huge thing to navigate through to get to settlement. Right. And come settlement, was there a anticlimax moment, or was there, hey, I've got ticked off one, and this is now I'm on my way?
I think in terms of the actual spectacle of settlement, it was a bit of anticlimax. But I think for me, that's that first one will always be very special to me. I think it was a lot of work that I had put in up to that point. So it was very, very rewarding, I think, to see that. To see even though some of the numbers against those loans I had never seen before in my life. That was a bit daunting, but I think, the way that your team puts it is how much are you willing to contribute per week to hold on to the property, right? So I had that in the back of my mind. So I was like, okay, it's going to be okay.
And so when the first mortgage repayment came out and when the first rent dropped into your account, how was that feeling?
It was very, I would say that was actually a bit more anticlimactic for me, because I mean, anyone who's recently purchased a investment property would know, within your first couple rental statements, you probably won't get much because you're paying your letting fees and all of these other fees that come through. So I was like, oh my God, I gotta pay this whole first repayment out of pocket now, and there's no rent coming in. But once that first, rental payment came through, I was like, okay, I can see where we're going here.
Yeah. And so obviously you've still got that property.
Yes.
And so when was the next property?
Yep. So that was in late. So there was a bit of a gap. There was a bit of life happening. So I moved on from those two jobs. Moved on as a graduate to one of the other big four banks. Within that, also got into a relationship, also decided to travel in that time. So I thought I'd take a bit of a break and, like you say, let life happen in the forefront.
Yep.
So I went to America, went to a few other countries, Canada, and then came back. And then I think it was late 2024 where we were looking in Melbourne. And mind you, before that, I hadn't done a portfolio review in some time.
Yeah.
So
Which you got into a bit of a trouble.
Yeah, I did. Yeah, I was a missing client for some
Yes.
time. So I had to like refocus and lock back in, and then had built up a bit of a savings buffer. Fortunately, there was a bit of equity in the Perth property as well.
Yes.
And then we moved on to Victoria in Ballarat.
Yep. So purchase price in Perth was for
20.
20. And so Ballarat, what was the purchase price there?
Ballarat was it was 360. So very rough around the edges.
Yes.
That one.
Yep.
So we did have to do a bit of work to it. So that was a whole new experience for me.
Yeah.
Like I had never done any sort of cosmetic work to a property.
And remote as well.
Yeah, remote as well, right? Like I don't know, I've heard you say, I am not good on the tools. Keep me and the tools as far away from each other as you can. So I think, so that was a whole brand new experience. So the cosmetic renovation.
And so we've graduated you from a simple buy and hold. And have you seen either of these properties?
No.
Okay. So we've taken you from buy and hold and graduated into very simple cosmetic renovation, which you didn't do physically.
Yes.
But we showed you how to manage that process.
Correct.
And the reality is that it's just a process at the end of the day, right? So, and I'm really glad you brought up the fact that you took a hiatus, you enjoyed life, right? So this didn't become life consuming. You dialed in one property, then you went away, enjoyed life, then you came back 2 years later, and then we plugged in another property. So that was in 2024. And now we are looking at the third. You've just exchanged the third. So there is a pattern happening over here, right? Every 2 years you're buying a property, right? And you've still got life happening along the way. So what were the lessons? So we had Perth, then we bought in a different state with different contract systems. So what were the lessons in there?
Oh my God, Victoria was a whole new process. I think learning about all these intricate fees that come in through exchanging contracts in Victoria was a whole brand new process for me. But I think it wasn't too much of a surprise because, like, as always, like you have to have the buffers in place. So all of that wasn't really like too much of a cash flow impact. It was more of a learning curve, I would say. If we speak about like tenancy, for example, two very different types of tenants in both those properties there. I think one thing that I experienced brand new with Victoria was when the tenant unfortunately couldn't pay the rent. Where he was struggling a bit, and that's where you come to see the more real impact of some of like being a landlord or owning an investment property, where people go through their everyday struggles as well, and for them it's life as well.
That's true.
But again, a lot of those cash flow buffers were in place, so it wasn't too much of an issue.
So you stuck to the fundamentals in always having a buffer in place and managing the property managers, which was a new experience that you were learning, right? Because you've just got Perth and then you went away. So while you were away in the US and Canada, were you dialing back into the property, or how were you keeping in touch with property managers? How were you keeping in touch with your investments?
When I was, actually, let me start from the first one. I think I have the Perth property manager. I have only good things to say, and obviously your team's teamed up with them as well. So based on your recommendation, I went with them. They have been unreal even to this day. I have nothing but good things to say about them. They are always on top of everything. They keep me informed. and there's no surprises. I think that's the key thing with having a good property manager. There's no surprises. So yeah, even with Ballarat, like great team. They stay on top of everything. They let me know if the tenants, missing payments, or if they might be struggling. They actually advised me to convert my rent from fortnightly to weekly, just to make sure that I know that the cash flow is coming in and the tenant hadn't missed anything. So that was one great bit of advice they've given me as well. So learning different things from various different property managers as well as I go.
Yeah, and you're with both properties with the same lender?
No.
Yep.
So
Okay.
the first one was with one of the major lenders. And then the second one, that was definitely an interesting one because the lending had tightened a little bit at that point. And then none of the big lenders were willing to take me on. Fortunately, I had a very investment savvy broker, and he was like, "Hey, you don't have to stick with these guys all the time. There's this option. There's this option." And even though I worked in the banking and finance industry, I had no idea that some of these lenders existed.
So you were working at a bank, right?
Yeah.
But you chose to use a broker as opposed to going with the lender that you're working with. What was the rationale behind that?
There's a few pieces of rationale there. One, he was my old branch manager when I worked at one of the banks, and he had started his own brokerage, and he was very investment savvy already, even when he was in branch. One thing, I think the optionality that the brokers give you just far outweighs any sort of benefits you do get with some of these proprietary lenders. And some of because they can go to more than one lender, they're able to get you more competitive deals as well.
That's right. And you chose to forego the employer benefits with the bank that you're working with, right? Because you could get high loan to value ratios without paying mortgage insurance because you're an employee.
Correct.
But yet you chose to go elsewhere and actually pay the mortgage insurance premium, right?
Yeah.
So, and that was a very strategic move on your part in terms of, okay, well, you made a business decision there in the sense that, okay, I'm going to get more money and more flexibility with this lender, but I have to pay for that privilege, whereas I could get less money but don't have to pay for the privilege. So that won straight away.
Definitely. Yeah. I think, that was like the way that my broker explained it to me as well, it was pretty much a no-brainer. Like I think, whoever's, they were competitive, and they were willing to take me on as a client. So I was like, this is a no-brainer.
Okay, So you now have 2 properties under your belt, right? How were the parents?
Worried. They were like, okay. I think they were just a bit confused about where I was going with all this. But I think ever since the first one, they've been very supportive. I think they saw the value that your team brought. They saw the value in some of my goals as well. But that, I think parents are always going to worry.
Of course.
So I think other than that, they had completely shifted gears, and they were egging me on to just keep going. So I really appreciate them for
because
doing
they could see the results of your journey, right?
Yeah,
so
definitely.
were you sharing your goals openly with them in terms of where you're heading?
Yes and no.
Or you filtered it across?
Yes. Spot on. I drip fed them exactly what they needed to know. Because at the end of the day, like I don't want them to worry too much. They need to know what they need to know.
Yes. Because and that's true with family and friends, right? Because if you give them the whole picture, they're going to view that picture with the filter that they've got. And they may not have the same knowledge that you've got. They'll have life knowledge, but they may not have the subject knowledge that you need to invest in property, right? So it's important that you don't share everything with them. There's a one of the sayings that I heard a long time ago is that I've forgotten how it goes, but it goes down the path of you'd only share what is necessary to get the feedback that you need, right? And this is true in any aspect in life, because the more you share, the more clouded you make it for them to give you the advice. So now 2 years later, from the Victorian purchase. So we're following a pattern here. So every 2 years you're dialing back in.
Yeah.
Lending has become substantially harder.
Yeah.
We've had policy changes in terms of potential policy changes in terms of negative gearing and so forth.
Yeah.
The lenders are falling like flies for you, right? Because you don't service as well because you already got 2 properties. They can't take negative gearing into account as much. And so we decided we had a choice, right? We could stop, or we decided, you know what, we'll put one more in and then stop and let things pan out the way it would, because you've also got some life goals happening as well in the meantime. Careers taken off, your income's doubled from when you started. And so you chose to go on a high interest rate loan to get the maximum leverage to get into the market. And how was that process? And more importantly, how were the parents with the interest rate that you're paying?
Yeah, this is a very interesting conversation. I think one thing that I think I should preface, in that 2-year time to buying the third one now, I moved out of home.
So added to your expense.
Added to the expenses. So me and my partner, we moved to Melbourne for 1 year. She got a role down there as part of her grad program, and it was one of the best years of my life. Loved Melbourne.
Did you go to Ballarat to look at the property?
Not even once. Ironically enough, my parents went and saw it.
Right,
so they were probably more worried.
Yeah, they were probably more shocked than anything else, right?
Yeah. Still again, emphasizing life happening in the forefront. So again, I can't emphasize how important it is to have some of those buffers in place. So life can still happen in the forefront. So moved out of home to Melbourne, moved back at the start of this year. So back at home now. Fortunately, very thankful for my parents to having me back. But yeah, I think in terms of the interest rate and this particular loan structure, it was very new to me. It was with one of the third-tier lenders. And it was my broker's first time actually putting an application in to this lender as well.
Okay.
So quite clearly,
so he's growing with you,
He's
right?
growing with
Yeah.
as you should. Like your team should grow with you as well. I think he was he instilled a lot of confidence in the process as we were going through, and he's very on top of the ball. So in terms of the interest rate, this is very high, relatively high, I would say. But yeah, the parents definitely had a few more questions on this one. They were like, okay, we understood where you were going, but we didn't know you were going to go this far. But I was like, I think they can see that I'm reassured in myself. So I think that gives them a bit of reassurance. But sometimes you got to make certain sacrifices to get to the goals that you want.
So the interest rate is about 1.5% higher than your normal rates.
Almost 2.
Almost 2%. So we had to then change strategy to then purchase a property that was a high yield.
Correct.
But still had huge growth prospects and still was owner-occupier focused, right? So we ended up in Newcastle with a 3-bedroom townhouse that is owner-occupier quality, and that has a fairly high yield. From memory, it was 5 or 5.5%
close
yield.
to 5.5.
Which then buffered out a lot of the higher interest rates. So now we've switched. We've got 2 houses. We've switched to a townhouse. How did you rationalize moving away from houses into townhouses?
I think it wasn't too hard for me to rationalize it. I've been to some of your talks and seminars, and you speak about the pod system. And for me, this was just another addition to that pod. It was just the cash flow driver for that pod. So from being honest, I never thought I'd be able to buy in New South Wales, at least in metro, even regional metro New South Wales, being Newcastle. But it was pretty easy to rationalize.
And so now you've obviously got a partner, right? How was she in terms of the journey, and when did she enter into the investing side, or she's not interested at all?
She's not. for now.
Yep.
I think she's very much still life at the absolute forefront, which is fair.
Yep.
And I have no issues with that at all. I think each to their own. I think I'll probably never force anything on anyone.
Yep.
You got to want it for yourself. I think there's a quote, like, I forgot how it goes, but I can't want something for you more than you want it for yourself. So you have to want something to really go for it. So I think she's still enjoying life. She's going to Europe this winter, so next month. So at some point, I'm sure we'll come together and become one in that journey. But until then, I'm flying solo.
Yeah. And this is important, right? You can't, like you said, you can't force financial decisions on someone else. They need to be ready for it.
Yeah.
And for some, they're just simply not dialed in, right? And for others, they need to go through a few steps, be comfortable, see results before they actually dial in.
Yes.
And then they become the leader of the investment journey. I've seen that many times with clients, right? So this is now still fresh. We've just exchanged on it. We haven't gone unconditional. We've just gone unconditional on it, yes.
Last Friday.
So this is going to be the third property in the portfolio. What are your numbers looking like in terms of holding costs so far?
In terms of holding costs, so after this new purchase comes into play, it'll be it'll be a bit higher. So I think previously when I just had the two properties, my holding cost, I measure it fortnightly because I get paid fortnightly. My holding costs per fortnight, you're probably looking at about $500 a fortnight. Once this property comes into play, you're probably looking at maybe close to $1,200, $1,500 fortnight.
Yeah, so it's going to jump right up.
Correct.
Yeah,
correct.
And you've catered for that, and we've discussed that there is going to be an exit phase in terms of the interest rate.
Yes.
Where as soon as the assessment rate drops, as soon as the market becomes a lot more conventional for us, because to the bank now you're a high risk, right?
Oh yeah, definitely.
So because you are unusual, right? A young person with 3 properties under their belt, you in fact, in the top 400,000 investors in Australia, right?
Yeah.
So one more, and then you'll be in the top 35,000.
Wow.
And this is the ATO stats, right? So in a population of 27 mil, to be in the top 400, that's a huge achievement, right? And it's only taken you 4 or 5 years to get to that stage through an accidental conversation at work.
Yeah.
So in this journey, where does this end for you at this stage?
I was actually reflecting on this after our last strategy review session. And I think for now, I think the light of the end of the tunnel is there, but I don't know.
You definitely know it's not the train, though.
Yes,
right?
exactly right. That's actually a very good way of putting it. So I think my goals will always be very flexible, and I'll always have to adapt to whatever's happening at the moment. But I think my broad goal, I guess, as I grow older, I want to make family the main in the forefront. So I guess whatever strategy allows me to have that will be my goal.
So it's no longer number of properties and all, it's the outcome.
Correct.
After, right?
Yes, that's right.
Yeah. Now I'm going to flip the tables.
Okay.
Right? What is a question that you'd like to ask me?
That's an excellent question. Can it be 2 questions?
Sure.
Okay.
Yeah. I'll charge you double.
Okay. Yeah, that's fine. I guess first question is property specific. What was like one piece of advice that you got that still sticks with you to this day from a mentor or client or anyone?
Yeah, that's a fantastic question in terms of what's one piece of advice that stuck with me over the years. And it was a simple off-chance remark that I had with one of my mentors. Now, my mentors are like you, different aspects of life. And he was very successful at property investing. And he just simply turned around to me and said, forget the headline figures, right? Forget the debt. Look at what it takes per week to hold on to the debt, because the debt actually controls the asset which is growing. The debt will remain constant or will get less.
Yeah.
So you just need to focus on how many dollars you need to find per week to hold on to this system. And that was my biggest aha moment, right? Because I came from a farming background in Fiji, and money was always scarce. So we were always looking at, don't get into debt, or if you're going to get into debt, pay it down as quickly as possible.
Yeah.
And that became a dirty word. Whereas when I started looking at it with his filter, in terms of forget the debt amount, forget the dollar amount, look at granular level as to how many dollars you need to control the dollar amount.
Yeah.
That changed my perspective, and that created the trajectory for my portfolio to scale the way I did.
Wow, that's a great response. And I feel like that's the sort of educational wisdom that you passed on to your clients, because throughout the podcast, that's exactly what I said as well.
Yep.
That's great. And I guess this is more of a investing question. When you're looking into an area particularly, how do you map some of the data insights to what you're seeing on the ground together?
Yep. And that's a really, it's an art.
Yeah.
Right. It is an art. It's not science. It's an art. The science is in the data. Right. The art is in interpreting the data into what's happening on the ground. So simple shifts, nuances in the area in terms of, okay, have the types of cars starting to change in the area? Are there knockdown rebuilds? To begin with, it needs to have that fundamental of at least having 60% owner-occupied to see those changes happening.
Yeah.
But it doesn't have to be 60% owner-occupied from the beginning, right? So as we look at Maddington, when you bought, it wasn't 60% owner-occupied. In fact, it was 60% investors.
Yeah.
And when I say investment, it was more 60% of lower socio-housing economic occupiers. So I could see the change in momentum happening, right? So this is where the data was showing one thing, the ground momentum was showing another thing. So I had to then project the data to say, if this momentum carries on based on this trajectory of data, where will this end? Where is the confluence, right? And once you arrive at that, you can always reverse engineer it to decide what type of property you're going to buy in that area, right? So the question always comes back to what you buy, and to answer that, you need to marry the ground truth with the data. Most people try and marry the data to the ground truth.
Right.
You need to look at the ground truth on a consistent basis to then look at the shifts in data, because especially in today's market, right, when there's a huge number of buyers agents, when generally an investor goes into an area, they're buying one property. Correct. When a buyer's agent that's focused on investors goes into an area, they're buying 10 properties. So that's going to skew the data. So you need to look at ground truth to then relate it and then filter and wash out the data to get to the core.
Yeah. Wow. Excellent insight.
That was an off-the-cuff answer. So
that was great. Yeah, very good insight.
Yeah, fantastic. So life lessons in this journey. What's a standout life lesson for you?
I think general budgeting has been huge. I think Excel has become my best friend, not just through work, but even personally. I like to know where every dollar goes and why it's going there.
So are you a mad budgeter where you go to your partner and say, why have you bought that extra bit of clothing?
Look, we don't share accounts yet, but I hope it doesn't get to that point. Yeah.
Because that would be constraining.
Yeah, definitely.
The life constraint. So the way I operate my budget is that I've got my investment money that I've put aside first. Then I've got my buffer that I put aside. Then the rest is, let's try and spend this money.
Very similar.
Which is, you're just basically looking at 3 different pots.
Yes.
That's all it is.
Yeah. Very good.
Yeah. So 2 questions to end, obviously. The first is, someone that's just starting out, what advice would you give them?
I think I mentioned it a few times, but it's important to have the right set of people around you. That can be just from mates to your wider team as well. So your property team, so that's your property strategist. Notice how I didn't say buyer's agent. Property strategist, mortgage broker, accountant, and if you need a financial planner as well. So having everyone aligned in terms of your goals and where you want to go, and make sure they're communicating with each other as well, not just you individually.
That's right. So you need to drive the team in line with your goals.
So you do get a bit of project management skills as well. That's probably the second most important skill I picked up from this journey. But yeah, the team is really important.
And now potentially owning 3 properties, we haven't settled on the third one, but soon. What's one advice you'd give to someone that's already a seasoned investor, who has already just started? And what are the learnings that you can share?
I guess learn to take everything as a piece of education. So it might be a setback, but I think learning from that is really important. Or even small pieces of information that you might hear from your agent, or from your property strategist or your mortgage broker. It's very important to just consume that information and store it away and have it ready, because I think education is really important in this space, and understanding how the process works, so you're more seasoned for the next time you go.
So it's important to understand the process and have the vision of the end game. So that the little bumps that you'll get along the way doesn't matter as much and doesn't get you to self-doubt.
Correct. They're just like potholes in the road.
That's right. So what keeps you up at night?
I don't know. Not a lot.
Trips to Europe?
I mean, I don't know. I'll probably be looking to travel sometime soon, but in terms of for the property wise, nothing really keeps me up at night. Everything, the machine's just moving in the background.
That's fantastic. That's fantastic. Look, we could continue talking about this forever. But I really want to thank you from the bottom of my heart to share your knowledge and share your journey, because that will no doubt inspire a whole lot of people, because you've made it a simple process of following a timeline, accidental or not, every 2 years, right? You've come in and ticked off another property, but you've changed your goal setting to, rather than income focus, it's day focused in how many days can I get back for my time, and that just gives you choices, right? So no doubt it'll inspire a lot of people. Thank you very much for sharing your knowledge.
No worries. Thank you for having me, Victor.
No worries. That's Property Investing Insights. This was Dinal Silva. And no doubt you will have more questions. If you do, we are just an email away. Or if you wanted to talk with us, ping us on socials and we'll have a chat. Until then, see you next time.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.